Hello everyone, Tom for the Market Zone here, and this is a quick follow-up video to my weekly market analysis newsletter which I posted on Sunday, which if you haven't read already you can check it out at themarketzone.net. Go to the weekly markets analysis tab and read the latest newsletter there. So this will be a follow-up video in which I will cover the updates, what has changed since Sunday and what happened today following the first day of Yellen's testimony in front of the Congress. But before we dive into today's chart and see what happened, just allow me to wish you all a happy Valentine's Day and to thank you for watching this video, showing your love by watching this video, subscribing to my channel, and of course subscribing to my services, the newsletter and the Elite Zone, which you can do at themarketzone.net. So thank you very much, happy Valentine's, and now let's see some charts. The first chart that I want to talk about is the S&P, which as you can see continues to push higher following the first day of Yellen's testimony. We don't see any sign of weakness in S&P right now. We don't see any sign of weakness in stocks in general. The sectors are in green. The financial sectors leads the way. And the only things that you need to be concerned about right now, if you consider to buy stocks, especially overpriced, overbought, or all-time high stocks, is the fact that the VIX is trading below 11, which is extremely low, and the fact that trading volume is also extremely low. But other than that, as it looks right now, there's nothing to be concerned about if you're holding bullish positions. I actually wrote to the Elite Zone members today. In the weekly trading plan, I mentioned several potential bullish breakout scenarios that I'm paying attention to that perhaps we can trade. And unless we will see some strong bearish reversal towards the end of the day, which is about 90 minutes from now, we will probably see the S&P continues to climb at least till tomorrow, till the next day of Yellen's testimony. Now as for the dollar index, we can see that Yellen boosted the dollar as well today, not just stocks. The dollar index is advancing towards the potential sell zone that I mentioned in the weekly markets analysis this week. Between 101.5 and 102 we have the potential right shoulder of a head and shoulder pattern that you see here in the daily chart. So 101.5, 102 is a potential sell zone, a resistance zone that you need to pay attention to if you are looking for bearish opportunities on the dollar index or bullish opportunities on some of the majors. Basically, as long as the dollar index stays below 102, we have a bearish potential in the dollar index, which means bullish potential in some of the majors that may be relevant later this week. The only scenario that will violate this bearish scenario is a strong close above 102 that will perhaps indicate that the dollar index intends to reach 105 to complete the bearish grab that we have here, which is the final target zone of the bullish scenario that I mentioned again 2 weeks ago. Right now I'm focused on the 101.5, 102 as a potential sell zone, and we will see tomorrow the dollar reaction to the second day of Yellen's testimony. EURUSD, which is pretty much a mirror image of the dollar index, failed to close above the 50 days MA line. As you can see, it was actually rejected by it, and that's a short-term bearish signal for EURUSD. Now, I mentioned in the weekly newsletter that I think that the EURUSD is extremely weak, but as long as it stays above the weekly support zone, bullish scenarios are reasonable. You can look for bullish scenarios, and definitely you don't want to sell near weekly support zone. So if you are looking for bullish scenarios on your USD, which pretty much correlates with the bearish scenarios in dollar index near 102, you want to see your USD climbing back above the 50 days MA line. If you are extremely bullish about your USD or extremely bearish about the dollar index, if we will take a Fibonacci tool and pull it from this bottom to this top, we can see that the 618 Fibonacci level, which usually acts as reversal level, is pretty much near 1.05. that can be a potential entry for extremely bearish, extremely bullish and aggressive traders. If you want to be more conservative, and that's my recommendation to you, we are still in a downtrend. What you want to see here is a bounce from the Fibonacci level, from the support zone, from the weekly support zone, and a close back above the 50 days MA line. That can be a trigger for a bullish entry, in which you can set 1.07, 1.08 as potential target zone for a bullish trade. Now that's it for this week's video, the follow-up video for the weekly markets analysis. Thank you for watching again. Happy Valentine's, and don't forget the winter sale for the Elite Zone is still on. If you want to see my trading scenarios for this week that I sent to the members today, you can join them, and I will leave a link at the bottom at the comment section. I will leave a link that you can see the details about the winter sale and perhaps join the Elite Zone members. Thank you again. See you in the next video.